Hey everybody, it is Chuck Barone. Friday, the 13th. Holy crap, September the 13th, 2024. It's the 13th is the mythical bad luck day, right? The Friday the 13th. I'm not personally a big subscriber to that, but and the market certainly didn't respond that way today. Sorry about the noise in the background, guys. The printer printing out for me, and we all working still. Sorry. Anyway, it should finish in just a second here. Busy day today in the markets, guys. You see how these markets went today? Crazy times. The market is so erratic right now. It literally will flip flop overnight like it did today. And we're going to talk about that a little bit later. Crazy freaking times, guys. Anyway, before I get rolling, let me take a half a second. As always, welcome everybody to the show. Welcome everybody to the chat. Hey, Kevin, the typical suspects, Smoke and Paradiddle and Wolf and a few of the other guys. Oh, hey, we got Simon here from Canada. How you doing, my friend? And a few others joining in. Oh, there's Elevate, my man, Touchdown Tommy. And a few others on the chat. Nice to see everybody. It's going to be a great wrap up. Did you guys, P.S., before I get started, did you guys see any of the game yesterday? Oh my, did my beloved Buffalo Bills spank that Dolphin booty, beat them like a rented mule. A very, very happy day over here in the Barone household, guys. Go Bills. Anyway, back to markets. So the markets had a wild day today, guys. Out of nowhere, you had influential Fed people talking about Fed, what they're going to do next week, and the talk became serious consideration to half a point cut. Both the Wall Street Journal and the Financial Times came out today saying that the vote on half quarter was a toss up. So the markets literally went bananas, right? And the stock market shot up like crazy. I mean, I don't know, because I've been reading that if they go ahead and cut a half a point, that would kind of, in essence, spook the market. Like, oh, maybe things are not as good as we think, kind of thing. Kind of like most of the people that that are fans of this show. We're all a little bit skeptical of the government's numbers, where things really are. And but the markets today took off, man. The Dow Jones jumped up 297 points, 41,393. The Nasdaq up 114 points, 17,683, and the S&P jumps up another 30 points today, 5,626 on the S&P. I tell you guys, these are all super close to new records. 5670 on the S&P. So we're at 26 here, so what are we, 44 points away? That is not a big move these days in these stock markets. It is crazy. The market now deciding to come around to the fact that the numbers we are getting points out that there's a real possibility of a soft landing. I took some criticism for that yesterday in the comments of the video. People talking about how naive I am. Well, maybe I am naive, but I'll tell you this, guys. For those of you who've been watching this show, who've been following what I've been saying, well, it's true, I'm not always right, and nobody is. But no one can deny the fact that I am right a lot more than I'm wrong. And, even though I'm using the same numbers everybody else is, whether they're good, bad, ugly, or not, they're the only numbers we get. And I'm not, if you guys have been paying attention, like yesterday, the criticism was talking about the possibility of a soft landing actually happening. And you guys know me. You guys have been watching this show forever. You guys know how skeptical I am about a soft landing. How have I described a soft landing over 1 million freaking times? I've described it when you picture in your mind the soft landing, picture the Hindenburg landing, right? So we're going to see if this actually comes to pass. But the market's certainly reacting today as if it was going to. Bond market also rallies up today, yields falling. The 10-year falls 3 basis points, now at 3.65%. Yields just continuing to come down. The 2-year at 3.59%, down 6 basis points. So now they've inversion, reversion, bond market a little bit confused as far as where we're going long term, short term, right? But the inversion is gone. The 2-year is now lower again than the 10-year. Now, this time it's actually 6 basis points. It's been 1 basis point either way, right? So basically, they've been sitting basically the same yield. Bond market rallies, man. Stock market rallies. The dollar today, down 10 basis points, still hanging in there, 101.11. So it's holding on to that 101 level. I would like to see it bounce up, man. I'm a strong dollar guy, but with this talk, I'm surprised it didn't come down further today, truthfully, with talk of a half a point cut, because it had rallied up on where we were pretty much assured it was going to be a quarter point. Everything changes in a day. Precious metals today rallying up nicely. Gold up $19.40, sitting at $2,578.70 for an ounce of gold. A really good number, man. It's going to go through 2,600 any second. Silver. All right, silver rallies up 85 cents today, now at $30.69. Finally breaks through $30. It struggled. Now finally breaking through. Now the big question going to be coming up next week and the weeks after, can it hold this $30 level and will it advance further? We need to build support now at 30 rather than that resistance. It took a long time to break through. Let's see how silver consolidates now above $30. Oil today falls 32 cents per barrel, sitting at $68.65 for a barrel of West Texas Intermediate. A little bit lower than where we were projecting. We're thinking 70 to 75 a barrel. A little bit below that right now. Oil, they're kind of. I've been right about oil, guys. You got to admit. And I've been telling you guys the demand is not there, and the supply in the U.S. is kicking ass. They're just pumping oil like crazy. So the price is going to come down. Demand is going to continue to come down as the world economy kind of slows itself down a little bit here. Now, it's going to be interesting, though, because Japan never really started. They raised rates, I think, a quarter point, but they've been zero forever. China going to move to cutting rates any minute. Euro cutting rates. England cutting rates. Canada cutting rates. And now the U.S. cutting rates. So it's where the world now moving from a more restrictive policy to an easier policy, and the whole world's moving in that direction. That's why you're seeing U.S. markets go crazy. Bitcoin today, nice rally for Bitcoin, up $2,162 last time I looked, $60,164 for Bitcoin. Now it pops up above, so like silver, it had been struggling to get back above 60,000. Boom, now it's 60,000 and change. So it's Bitcoin and silver moving in tandem through resistance. We're going to watch both of those next week to see, can they consolidate above that number, and hopefully they both will. All right, so let's talk about news today, this half point chat, okay? Guys, it just changed over freaking night. So the big question now is it really going to, are we really going to get a half a point cut? Traders are betting yes. Traders pushing money into it, okay? And they've been reading plenty into some of this stuff. Like I was saying, those 2 articles today in the Wall Street Journal and the Financial Times talking about possible half-point cuts, right? Odds of a half a point cut today jumped from 12% to 50%. So they feel like we got a 50% chance of getting a half-point rate cut, up from 12 yesterday. It's crazy. I mean, the whole market just swung today. The Wall Street Journal and the Financial Times both reported that the size of the cut on September the 18th next week is a quote-unquote toss-up. Then you had a former New York Fed president. And the New York Fed president is a probably the most powerful of all the Fed governors, right? Other than the chair. And this former Fed president, Bill Dudley's his name, he came out today and said that there was a very strong, quote unquote, strong case for a deeper cut next week. And that all came out pretty much at the same time. And boom, it took off like crazy. You saw the numbers today, nutso time, guys, right? The Fed meets next week, starting on the 17th, I think Tuesday and Wednesday. The rate announcement will come on the 18th with Powell, his little press conference stuff. So that next week's going to be huge. Can't wait to see how it all turns out. Now, this is what they've been talking about. You guys who aren't deep historians into money and Fed policy, this is what they call the pivot. Okay, the pivot from more stringent monetary policy, tighter policy. Now the pivot to looser policy, less stringent rules, lighter, easier rates. So the pivot is here. Now the question is again, and we talked about, I predicted this a long time ago, how the second we knew we were going to do this pivot, the talk was going to turn to how deep and how fast. That's exactly where we are right now. Now there is some fear in the market that if the Fed cuts a half a point, that will kind of trigger the market into thinking that, things are really not very good right now, signal a more serious downturn coming for the stock market, for unemployment, for a lot of the things that are the key things in our economy, even though right now, other than some very unhappy people at the supermarket, there really is not much pointing to an imminent recession. I mean, it is what it is, guys. Now, don't get me wrong, you still got a lot of issues with real estate. Not only commercial real estate, which is a ticking time bomb that's getting closer and closer to blowing up, but in residential real estate where, first-time buyers are locked out of the market. So a half a point rate cut, I got to say, my own personal interest, half a point rate would be great. We might be able to get mortgage rates all the way down to about 6%. Would be huge. Refi boom on, boom, here we go. We'll see if it comes to pass. I think that, the markets tend to get a little bit more exuberant, and they've been whipsawing all over the place, man. Yesterday, now it's going to be a quarter point. We were fairly certain of that. Now today, from nothing, basically jumping up to 50% chance of a half a point cut. Now I got to say, if I'm Powell, and Powell's a pretty prudent guy, I'm going to play this one pretty tight. Unless, of course, he knows a lot more about real conditions than I do and that we all do. But I really was surprised that Powell was going to cut at all during an election. You guys have heard me talk about that a million times. I really didn't believe the Fed would want to be affecting the economy while there's a really close election going on, where their decision really could make a difference in how the election goes. So the idea now that not only are they going to cut rates in the middle of a heated, close election, they're going to cut rates a half a point. Again, I'm got to see it to believe it, man. And guess what? It's going to happen soon, man, because we're going to blink our eyes and it's going to be Monday. And the Fed's going to start meeting, on the 17th, which today's 12, so 13, 14, I guess it's Wednesday and Thursday. So the Fed will start their meeting on Wednesday the 17th. And we'll have the announcement next week on Thursday. It's going to be a wild week, guys. It really is. Because I think the stock market, depending on how frenzied they get toward this half point cut, because I think what could happen is now they're going to build in the actual expectation of a half a point cut. And then if they don't get it, now you get a negative reaction instead of a positive one to rate cuts. It's going to be a fascinating week, guys. All right, so let's moving on. Jamie Dimon today, who's a guy that is not my favorite, but I got to admit, I got a little respect for a guy. Anybody that's got the cutthroat balls and all the things you need to become chairman of JP Morgan, This is a guy that, love him or hate him, you got to have a little bit of respect in his opinion. He came out today at a big international bankers doodad, coming out today warning about stagflation. He called stagflation worse, a worse result than a recession, right? Because the recession for sure stamps inflation out. Stagflation, as we know, is when the economy slows and the government and the Fed has been trying to slow the economy down, while at the same time, inflation and unemployment are rising. So the economy is slowing down, not quite in a recession, but unemployment rising, inflation rising, everybody pissed off and unhappy. That's what Diamond is warning of. And he may have a point, guys. This whole idea of cutting interest rates, especially now if they're going to cut a half before we reach our target. That's exactly what they did in the 70s. And that's exactly what led to stagflation. Because what happened is they cut rates too soon. Inflation came roaring back. Like they thought they had it beat. Now, back then, they didn't have the target number like they have today, right? So back then, they declared victory. Inflation spiked back up. They raised rates again. Inflation came down. They cut rates. At one point, toward 1980, the inflation rate in the United States was over 14%, guys. Over 14%. And the way I understand it is that whatever the inflation rate is, the Fed funds rate needs to be higher than that inflation rate. Okay? So the inflation rate going to give you an idea of where Fed funds should be. Now, it's been weird because the last few years we've had that still pretty much a 2% inflation rate, but guess where Fed funds were? 0. We got inflation. Shocking. So now they righted it. And the Fed funds rate, I'm not even sure. I guess it's been higher than the inflation rate, but for a while it wasn't close. When the inflation rate was at 9% August of 22 or 3, whatever, the Fed funds rate never got higher than it is today. So interesting stuff. And if Jamie Dimon's warning of it, you might want to pay a little attention to it. Check this out, guys. Payment on the national debt, which is approaching 36 trillion freaking dollars, has now passed. The cost of that debt, the interest we pay every year on that debt, is now more money than we spend on defense. We spend a lot on defense, almost $1 trillion. It's also now larger than what we spend on Medicare. This is absolutely unsustainable, man. These guys are going to kill the golden goose is what they're going to do. $1 trillion per year just to pay the interest on the debt these assholes have run up. And tell me, guys, with all these low interest rates and borrowing $35 trillion, can you point to something that we got for our $35 trillion? And go, yeah. See that new airport? That's part of what we got. See that new highway? That's part of it. See that high-speed train? Yeah, look at that, man. New York to LA. That's what we got for our $35 trillion. But we got none of that. Analysts warning of deflation in China. China with their excess capacity, their big manufacturing capacity, but they got no demand there. And the government is loath to stimulate the economy. So China, like the Japanese before them, heading to a period of stagnation and deflation, which is real scary to central banks. Anyway, guys, it's Friday. It's been almost 19 minutes. Let me get off here. Everybody go forth and have a super awesome, amazing, killer weekend. I hope all of your guys' teams win this weekend as handily as my beloved Bills did. It's going to be a nice weekend. I got my mom in town, man. It's super happy time. My wife's birthday. It's going to be a lot of fun for us this weekend. Birthday party. Get a little sun on my face. Relax and enjoy NFL. You guys do the same. Let's get out of this financial world because we'll be back to it on Monday. We know we got a massive week next week. Everybody get out. Great weekend. Hit the thumbs up on your way out, guys. Would really appreciate it. Until Monday, everybody, have a great weekend. Peace out.